So what happens when you have a company, it's firing on all cylinders fundamentally, but the stock chart looks like it's falling off a cliff? That's the real battle we're diving into today, that classic clash between long-term story and, well, short-term price action. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, our deep dive is all about the pharma giant Novo Nordisk. We're using data pulled this morning, actually, November 5th, 2025, and the backdrop. The wider market's kind of holding its breath, indecisive before some big economic numbers drop. S&P, NASDAQ a bit lower, Dow flat. That uncertainty, it just adds another layer here.
It really does. And what's so interesting with Novo Nordisk is just how, good the actual business performance is. They're genuinely knocking it out of the park in their field.
Right.
If you just look at the fundamentals, the report card, it's stellar. They just reported a fantastic 12% jump in sales for the first 9 months.
Wow, 12%.
Yeah, and that's pretty much all driven by their big drugs and diabetes and obesity care. That's their sweet spot.
And that success, it's huge. But they're not resting on their laurels, are they? Talk about strategy, that massive bid for Metsera. $10 billion.
Exactly. That's a really aggressive move, signals major ambition, wanting to dominate the space even more.
Is that maybe spooking the market a bit?
Yeah.
The cost, the integration risk?
It's possible, could be part of the equation. But interestingly, Wall Street analysts, they still seem pretty confident. Our research shows almost 2/3 rate the stock a buy or strong buy. And many have actually upgraded recently because of that sales growth. And if you look at valuation, like using free cash flow, the actual cash the business makes, we estimate for value, is maybe around $58.
Okay, so quite a bit higher than the current price, which is below $50.
Exactly. Fundamentally, based on cash generation, it looks, undervalued.
That's a compelling story on the fundamental side. But let's pivot, because the technicals, the chart itself, it tells a completely different story, a much darker one.
Yeah, the technical picture is, let's just say it's grim. You're seeing just relentless selling pressure. It's pushed both the long-term and the short-term trends sharply down.
So no relief anywhere on the trend lines.
And not really. And the volume indicators, they back this up. They show a significant sustained outflow of money that often points towards, bigger players, institutions maybe heading for the exits, not just retail jitters.
Right.
And momentum, completely stalled. It's deep in negative territory, just no buying power coming in to stop the slide, basically.
But wait a second. If the sales are booming, and it looks undervalued, like you said, why aren't the big institutions jumping in to buy this dip? What's the chart actually reflecting here? What's the fear?
I think it's the sheer speed, the velocity of this drop. It's been so fast, so sharp, that the stock is now flashing deeply oversold signals, on things like the RSI.
Okay, oversold. Usually that means a bounce might be coming, right?
Right. Usually, yes. That's the textbook interpretation. It suggests a snapback rally could happen. But here's the risk. In a really strong downtrend, oversold can just get even more oversold before it turns. It's not a guaranteed floor.
Tricky. And yet, despite this ugly chart, you mentioned sentiment. The crowd seems more optimistic.
Yeah, surprisingly bullish, actually, especially in the options market. Our research shows the put-to-call ratio is sitting at 0.79.
Meaning more calls being bought than puts.
Exactly. Since it's below 1, it means traders are buying significantly more calls betting on a price rise than puts, which bet on a fall. They seem to be looking for a recovery, maybe towards that $55 level.
Okay.
And another thing, the big institutional bears, they're kind of absent. Short interest is incredibly low, less than 1%.
So they're not willing to bet heavily against it either, despite the chart.
Seems like it. Maybe those strong fundamentals are making them hesitant to short aggressively.
Okay, so let's recap. We've got this fundamental giant, great sales, maybe undervalued, but a technical chart that's just in free fall. Retail options traders are betting on a bounce, but institutions aren't making big bets either way. Where do we land on this? What's the verdict?
Look, it's a tough call, but weighing everything, we're leaning cautiously bullish on Novo Nordisk.
Cautiously bullish. Okay, why?
Our thinking is rooted in the power of that fundamental story. The sales growth, the aggressive M&A with Metsera, these things are building a really strong long-term position, an economic moat, you could say. We think, eventually, that story is just too compelling for smart money to ignore forever. We believe the fundamentals will ultimately win out and rewrite this ugly chart.
Okay, so fundamentals over technicals in the slightly longer run. What are the key levels now, the battleground?
Right, so for the bulls, the immediate job is to get back above that $50 psychological level. That's key. If they manage that, the next target becomes that $55 level where a lot of those call options are.
And for the bears, what breaks the bull case short term?
The bears need to break the key support down at $45. That's the critical line in the sand for us. Our firm invalidation level is a close below $45. If it breaks and stays below that, it really signals the technical bears have won this round and more downside is likely.
So it really boils down to this. Do you trust the beautiful story or the ugly chart right now? It's a fierce fight between value and momentum. For now, you're giving the edge to the story, suggesting a recovery, but keeping a very close eye on that chart.
Precisely. The fundamentals provide the reason for optimism, but that technical damage demands respect and caution.
Got it. Well, that's a fascinating setup. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.